Broader markets have been on a bit of a decline. You had the small cap index, which did see a decline for a fifth week. In fact, it's the biggest weekly decline that we've had in about the 5 months. What's come to the fore, though, all through last week was the private banks. They really came to the fore, and the Nifty Bank as well managed to advance for a fourth consecutive week. Autos, they also held out quite smartly. IT, though, also was ebbing off just a wee bit. So, net, in a flash for the week gone by, the small cap index fell nearly 2.5%, whereas the Nifty gained about 0.6%.
So Aisha, you may be coming out from a long weekend, but frankly, in terms of the market trend, I think market trend just remains pretty much the same and pretty much predictable as well, which is that you had money is moving into large cap stocks. I mean, very simple. I think if you just stay with this graphic captures the mood. That's it. I mean, just look at the data. Nifty positive bias, small cap negative bias, mid cap doing better than small cap, but not in line with what Nifty is doing. I guess this is what the market was anticipating. It was it's really been the mood point where large and mid cap stocks, especially small cap stocks and micro cap stocks, correction has kicked in. I wouldn't call the correction as a very brutal correction, but because there are flows, because global cues are strong, because earnings are strong, the GDP is expected to grow at 8%, the market mood is constructive and Nifty is now moving from strength to strength. I like the pattern. The reason why I like the pattern is because the margin of safety is with large cap stocks. They are the ones who would benefit largely because of growth, and the excesses in the market are getting completely challenged right now. So I like what is happening in the market, which is that the rising tide phenomenon in small and mid cap stocks that has got that seems to be stalling. Large cap stocks are picking up weight. Quality stocks are moving higher, and the excesses in the market are clearly getting weeded out. So I think from a market standpoint, if you look at the contours, the contours, the trends, and the price action, I think it's constructive.
Yeah, and that point only being further cemented by the AMFI data as well that trickled in for the month of February, showing that for 14th straight months on the trot, the inflows have been fairly robust. For instance, the number that stacks up for the month of February is 1.18 lakh crores, so at a 23-month high, and clearly SIP is at record levels, Nikunj.
I mean, that is the most heartening feature of this bull market, which is that long-live SIPs and long-live retail investors. They are the ones who are really calling, they are in the driving seat. We are looking at number which was as, before 10 years ago, this number was not even 5,000 crores. Now we are looking at a number which is 19,000 crores and soon could be 20,000 crores. So imagine on a monthly basis, this market is getting a cushion of about 20,000 crore. 20,000 crore is more than $2.2 billion. Now that kind of a cushion is there, and when it comes to SIP, this is not, and 2021 and 2020 has told us that volatility in the market has not really impacted the long-term SIP investor. So imagine from a market standpoint, this is now a very large pool of money which you pretty much know is going to be at play. And this number, even though I may argue back and say that, okay, this flow is moving into small cap stocks and into mid cap stocks, okay, that's a big cross. But ultimately what matters is that 19-20,000 crore of fresh flow into market is coming on a monthly basis. So the net number now stands as high as 26,000 crore. And look at how the number is elevated. From November to Feb, which is like 5 months, we've seen an uptick of about 10,000 crore of net inflows. So this in a sense is a very simple and a very easy graphic to understand that why markets are not going to go lower in a hurry is because A, there is money on the sidelines, B, the SIP flow I think are really gaining traction. And if one really looks at what the big picture support is, I think the big picture support is extremely incredible. We were at the Birla conference, Aisha, and what's the mood point we came back with? The mood point we came back with is that, look, this culture of money moving into equities via SIP route, I think is the real deal and it's here to stay. I'll give you some data point for those who say, okay, arey, itna bada ho gaya hai, aur kya hoga? Look at the number of Netflix account in India, look at the number of Swiggy accounts in India and compare that with the unique mutual fund portfolio. And the unique mutual fund portfolio in India is not even 10 crores. And the number of internet accounts and the number of food delivery accounts what we have, that number runs between 25 to 30 crore. So I think we have a long way to go. It's now migrating from tier 1 to tier 2 and even tier 3 cities, and I think this entire flywheel effect has just about started.
Yeah, absolutely. We seem like we're just on the brink of it. But yeah, the talk of the town has really been the entire Tata Group. What with the move that you saw in most of these names in just the last 1 week alone, the kind of market cap addition that the entire Tata Group has had has been quite phenomenal. Be it the move on Tata Motors and especially names like Tata Chemicals as well as Tata Power. Though over the weekend we reported that it's not going to be such an easy task to actually IPO, and it seems like that could very well puncture this rally, because it seems like the rally was purely in anticipation of a Tata Sons IPO.
Yeah, so if Tata Sons in its current avatar sticks to its entire NBFC structure, they will have to go public. The point is that will they ensure within the guidelines that they are able to come up with an alternative structure so that they don't have to go public? And I think they would do that, because once you go public, you will have to follow a lot of scrutiny. Once you go public, there are serious disclosure which you will have to follow. Tata Sons is a holding company, and it's a holding company where in a sense a lot of new businesses are incubated. So I don't think the Tata Sons right now is going to be taking their holding company or their big flagship company public. Now markets thought that they will go public, and because markets thought, and there were buzz and there were rumors that they would go public, companies or Tata Group of companies, and remember Tata Group of companies in a sense, this is a very old group and there were cost structures within structures, cross-holding, and those cross-holding in a sense is somewhere we saw excitement, which is, let's say, Tata Chemical. They have a large ownership in Tata Sons, Indian Hotel, Tata Power. These stocks, they went up in a hurry considering that Tata Sons valuation would be unlocked. But it looks like, and what we learned from sources, is that Tata Sons is looking at finding an alternative structure where they can really avoid the compulsion of listing. So this entire price action which happened in few Tata Group of companies, especially names like Tata Power or Indian Hotels, or even for that matter Tata Motor, I think will come down. So that large bulge what you saw in some of these stocks, because of this whole anticipation and expectation Tata Sons will go public, that needs to come under pressure, and that could be anywhere between 3 to 5%. It's not going to be like a 10% cut or a 15% cut. These stocks appreciated anywhere between 3 to 8%, and I think that reversal should be on the cards.
Yeah, and then there's that IPO buzz as well that's been spurring Tata Chemicals. It's seen an up move of nearly 36% in the week gone by. Well, last week may have been truncated, but this week there's a lot of action to watch out for. So you've got the poll dates that are likely, that will be announced by the Election Commission. You've also got a lot of inauguration of new projects that will be announced by the Prime Minister this week. And then getting a little bit more micro, the SBI plea that will be heard up until seeking extension for the 30th of June for the electoral bonds. There's the CPI data. The NCLT will be hearing the matter related to the Zee-Sony merger. We'll be looking out for that as well quite closely. Paytm Bank, what the status is as the deadline will be coming about. And then overseas, we've got the Russia polls as well. So a lot of data points, Nikunj, as well, that we'll be looking at quite closely.
See, markets assuming that you'll get a sense on poll dates. Now, whether technically it's possible or not, I don't know, because there is a vacuum suddenly at the Election Commission after the recent resignation. So I don't know whether election poll dates would come this week or not. But if they do come, that in a sense is something which markets expecting, that the clear date in terms of phase 1, phase 2, phase 3, whatever phases they are likely to follow, that should come out this week. Inflation, well, if you've been watching ET now, don't worry, Governor feels inflation in a sense is coming under control. So inflation data is not critical, but inflation data is due to come out, which frankly from a market standpoint may not be that important. Paytm Bank deadline, all of us need to remember that Paytm, Reserve Bank of India will not give them an extension. If they will not give an extension, which means that the money which you have in your Paytm wallet, you cannot repatriate it, but you will have to start using and extinguishing your fund. So that's more like a everybody should know that Paytm deadline ends in 15th of March, and you need to be a bit careful. I mean, I'm not saying it, the governor is saying it, that, please go and open your accounts somewhere
You
else.
very
So,
categorically said,
exactly.
link it to a bank.
Exactly.
Yeah.
And Russia polls, doesn't matter. Doesn't matter there.